Hello everyone, this is Mayank and welcome back to my channel. As usual, today also we'll discuss about one particular stock, but today's stock is very different for whatever we discussed in the past, and this particular stock is very apt for the current scenario, which is very high volatility in the stock market. The market can go anywhere from here, it can also give a pullback, it can also fall further. To have a good stock in this kind of situation, we need these kind of stocks what we are going to discuss today in this video. So stay with me till the end of the video to get all the fundamentals, the reasoning behind why I chose this particular stock, and then we'll see the charts also, what kind of return it can give, and also why we are seeing that, why I'm thinking that this kind of return can be possible in this stock. So we'll have a detailed analysis. I'll try to keep the video as short as possible and try to explain the basics in that time limit also around 10-12 minutes kind of things. But now seeing this particular GIF on the screen that people are putting money in the bond stock market, maybe ironical to that particular stock, but since we all need to make money, so choice of the stock is very important, and that's the reason why I'm discussing that particular stock. Saying that there is a very good relation between the raising interest rate, the bond yield, and the impact on the stock market. These three things are interrelated. Now, if you're interested in that kind of content, do let me in the comment section. Probably I'll create a video on that. So I tried creating a couple of videos beyond the stocks, but somehow either I was not able to explain properly or there is not enough traction on that. But still, I'll try to explain it in a better way this time if that's the concern. Or else, if people are not interested in that, then also we can skip that and directly talk about stocks only on this channel. Saying that again, I'm not a financial like kind of educated person. I'm not in that background, not an economist background, not even an MBA. I'm just a software engineer. So whatever I learned from my investment journey so far, and whatever I read and understand, watch some other bloggers or YouTubers, and then read articles on other paid channels which I've subscribed to. Based on that, I create the videos. Introduction has been quite longer. So let's directly jump into the stock. Stock what we're going to talk about is Oil and Natural Gas Corporation, which is known as ONGC. Why ONGC? So ONGC is the biggest. What is ONGC basically? ONGC is the explorer in India. So basically, they explore where this crude oil can be found, and they take all the oil from the ground or high sea, and then they give it to the refiners. Who are the refiners? IOC is the refiner, Reliance is the refiner, BPCL is the refiner. So these companies are, and their subsidiaries are refiners. So Oil and Natural Gas Corporation does this. This like they are the explorer, take the crude, give it to these guys, they refine and take it forward in however they want to be. These guys are so big that out of nine, so if you see here, small, out of nine producing basins in India, ONGC discovered eight of them. So they have almost more than 90% record in this particular thing. So it's a clear dominance of ONGC in this particular sector. Now, some of you might say, okay, we are going to get replaced by EV or this kind of things are coming up. But understand this fact, government itself has a target of having 10% registrations of EV by 2027. That is still 5 years down the line, at least 4 years from now, if you consider this year is getting over. Only that is, they are saying only 10% target. So if you want to reduce crude demand, you have to go at least 30-40% target. That can reach up to 2040. By that time, I think most of us will be in a very different position what we are right now in terms of stock market investment and other things. So keep that EV discussion out of this. Crude oil is also going to be in demand, and ONGC will keep on existing, and they need to find oil for country like us to suffice on the demand of crude oil. So ONGC is going to stay. There's no debate in that. Now let's talk about fundamentals. ROC and ROE for a government company is not bad at all. 16.8, 19.5 is a very good ROC if you see government companies. Now I'll say why something government companies, because if you go to shareholding pattern, so we all know it's a Navratna, but still I'm saying go to promoter holding 58.89% owned by President of India. That means the government. So they're a majority shareholder in this company. So this is ONGC first, important part. If you go further into the particular fundamentals, then now why we are discussing this particular, these fundamentals are not the reason we are discussing. We are discussing this particular stock because of this. This is called dividend yield. Dividend yield means how much money you are getting compared to whatever money you have put. Now this can always keep on changing because every time they give a dividend, they give a different dividend based on their price and everything, what a profit they have made. But this is the dividend yield. Now 8.57% you are getting every year. This changed. Few days back it was around 10%. Now since the price reduced, now it has become 8.57%. So this keeps on changing. So on an average 8 to 10% something which ONGC provides as a dividend yield. Now imagine that you are getting 10% interest on a particular on your investment, and then there's always a good chance that the stock can appreciate also. So the best investment you can do in this market is find a stock which has a chance to appreciate and which gives also a dividend yield, a decent dividend yield. In this market where if you book a stock, there's no guarantee that it will go up or go down. Even same goes for ONGC also. ONGC, if you invest in this point, there's always a chance that it can go further down. Most likely it won't go because I'll explain in the form of chart. But if it goes, there is chance. Nobody says never say never in stock market. It can go always go down. But if it goes down, you will get some dividend out of it. Let's suppose you invest in, just giving a vague example. Let's suppose you invest in a company doesn't give any dividend. IOLCP, IOL Chemical and Pharmaceuticals, right? Suppose it's a good company, everything is good about it. I've discussed that in the past also in the channel. Let's suppose invest in that and it goes down, market crashes, it goes down. So you don't get anything out of it. But if you invest in ONGC and other dividend paying stocks, NMDC is also good dividend paying stocks. I'm not saying go and invest in AMDC or NMDC or go and invest in ONGC. I'm just saying that these companies are good dividend paying stocks. So let's suppose you invest in this kind of companies, at least you'll get something, if not nothing. And then there's always chance of appreciating. So find there are a lot of dividend paying stocks, but not every stock has chance of appreciating. But if you find a stock with a chance of appreciation as well, then at least you get some money dividend, and whenever it appreciate, your money also appreciate. This is the kind of stock what you should invest right now if you are in the stock market with this kind of volatility. This is the only reason why we're talking about ONGC right now. So we'll not talk about these fundamentals and numbers and everything. For highlight, I'll show you that there is nothing bad. They are increasing. If you 60,083, 1 lakh, 1 lakh 14, 108, June 21 because of COVID. Then 1 lakh 22, 145, 155, 182. So every quarter they are making big sales. In terms of yearly, if you see, just take it from here 160, 124, then 282, 322, 421, 396 because of COVID, then 303. 491, 606. So every year they're making more and more sales. In terms of profit also, if you see net profit around, take it from here, 17,000, 13,000 decrease, 29,000, 26,000, 33,000, 11,000 very bad because of COVID, 21,000, 49,000. This trailing to 51,000 crores. So this is the kind of money, it's in crores. I hope I'm not saying wrong. Yeah, it's in crores only. So 51,000 crores is the profit these guys made in trailing 12 months. So company wise they are doing good. If you see stock price CAGR, yes, it has given negative return over a period of 10 years, 5 years, 6, 3 years, 1 year, whatever. It has given a negative return, but we are discussing this stock only because it's dividend paying stock. And right now the situation, the charts, the kind of capital expansion is the country India is going, ONGC needs to support growth of India. And this is why I'm saying this stock has all the potential to appreciate from now. Now, since I hope I was able to make a clear point why I've chosen ONGC because of simply because of dividend yield and the appreciating factor. Now, let's go chart and decide why I'm saying this appreciating factor in this. This is a chart which is for ONGC. I've taken a chart over the period of 8 years. I'll just try to squeeze it further and see. I'll show you. It's about, so this is around 10 years. 2013, if you see in 2022 right now, let's suppose assume it's about 10 years of chart. So in this 10 years of chart, this is a very good base. So this is the current price what is having, right? So in this 10 years of chart, this stock, how many times this stock has touched this particular base? So this stock has touched this base only thrice, right? So this the first time it's didn't even touch, it's close to touching it. So I'll just say this is the first time it was close to the base, that one there 2016. After this stock has never ever even came close it. Once it crossed, only once in last 10 11 years, that is because of COVID. After that it was in down, every stock was in a downturn and then started moving up. It crossed, now still again it's making a base over here. If I just throw this, first it make a base over here, and now it's making a base over here. Now this is high volatile, it might cross it here, but since this hasn't happened anywhere, even during pandemic also, like after when not through, yeah, when a pandemic only it crossed, but before that it never crossed, after that it never touched here, it never crossed it. So all this all chance that it will never cross it, but still if it's crossed, dividend yield is there to back you up. So we are assuming that it will not cross, and then we have one more chart pattern. So this chart pattern is this particular strong, very very strong point. So I'll just make it close here. So this is the one. Now if you see, I'll just draw it. This is a very good head and shoulder pattern. So, okay, so double head and shoulder pattern. So this is one head, this is one head, sorry, shoulder, and this becomes your head. And then it can, if it doesn't break here, it moves up, then this becomes your other shoulder. So it becomes a double head and shoulder, say head and shoulder pattern. So this left shoulder, right shoulder, middle one is head. If you see the kind of return it can give you, just wait and see. This is a very very clear justification why this return will come. So if you take from here and if you move it further to this point, right, so this is the return what can get. So where does it touch? It gives to you the all-time high. This is very close to its all-time high so far in the last 10 years return. So that goes up to 303.95, almost 304 rupees return. In terms of percentage, if you see from this current price, this can give you a return of around 153% return. So 1.5 times your, like 2.5 times you can make your money if you invest in this particular time. How much time it might take? It might take even 5 years also. Let's assume it will not reach 5 years if recession doesn't come so bad. And even if recession comes, recession will come only in US and Europe. It will impact India, but it might not impact the way it impacts Europe and US right now because of the self-reliance India is creating for itself. But assume India will be impacted and there will be a lot of delay in the moving stock market going back to where it was. But it will take 5 years kind of thing for it to give you that return. In 5 years, if you make 1.5 times, that means around 20 to 23% CAGR per year. On top of that, you are getting around 8 to 9%, 8 to 10% range of dividend yield. So now if you calculate, first you appreciate your money to 2.5 times. That means invest 1 lakh, you get around 2.5 lakh, right? So that is you get after 5 years. In the middle, for that 1 lakh, you get around 10,000 every year. Let's suppose it doesn't appreciate and you get an average of 10% return. So you get 10,000 every year. So you get 1.5 lakh profit and then 50,000 in 5 years. So basically 2 lakhs. So you invest 1 lakh, you get 3 lakhs. So it's triple your money in span of 5 years. Tripling your money span of 5 years for a company which is giving dividend deal and which is backed by government, it's not a bad return at all. At least for me, it's not a bad return. You can take your own call and decide whether it's a good return or whether it's a bad return for you. But and why it will get why it gives dividend? Very simple. It has to give dividend because government has to make money. Government make money in two ways only in India or in a other country, right? Either through taxes and through dividend yields. Taxes is something which you all are paying, indirect taxes, direct taxes, all the taxes government is making. Apart from that, how does government make money is through dividend by these Ratnas, Maharatna, Navaratna, Mini Ratna, all these Ratnas where government has holdings. So 50%, 58%, 59% holding is in government. If suppose this company gives 1000 crore of dividends, so 590 crore dividend will go to government only. So if government wants money, then this company has to give a lot of dividend. Like that, there are a lot of companies which government has holding. So all these dividends goes to government. So if they give less dividend, government will make money, less money. So for government to make more money, these companies has to give more dividends, whatever possible, whatever they can. So dividend is definitely going to come. Will stay in that 8 to 10% range. So you are definitely going to make 8 to 10% per year on investment. And then appreciation is always on cards. And as for the charts of this company and the kind of monopoly this particular company has in the Indian market, there is always a very good chance of reaching this target. So this was my video. I hope it makes sense. I hope you like it. So do like the video, do give your comments, do share with your friends and family, and if you think it's helpful. Thank you so much for watching. Stay happy, stay safe.